friends, let me tell you about this marginal costing session. Today we're going to start with the chapter marginal costing and we're going to solve it from ICAI module. And let me tell you what wonderful sums ICAI has kept in this module. So much of variety that you just cannot skip it. Okay? Today in this session I'll be trying to cover up most of the sums, but let's see how much I can do it. Okay? So friends, this session is about marginal costing ICAI module. And friends, in this session, we will try to solve the sums on our own first of all. So are you ready? It's already 9, so let me start with the session. Okay. So once again, welcome everyone to the session of costing. We are here to solve marginal costing ICAI module. Myself, Professor CA Devangi Shah. I teach costing for CA Inter and CA Final level. Friends, all the best for your May 22 exams. And let me tell you, if you still feel that you are not confident with this subject, please download my app, Costing by Devangi, and let me know your concern. I am here to help you. Only if you download my app, I can get connected to you. There is no other way. And friends, let me tell you, for May 22, we have a crash course of 37 hours, right? This is fully exam oriented, which covers all the concepts supported by sums of it. A thorough exam oriented crash course has been made by me. Okay. And secondly, for November exams, we have a regular course which is going on. So friends, if you are interested, please download my app and get to know more about these courses. And friends, if you don't want to buy, still it's okay. Download the app and you can ask me your questions. Okay. So this is the way we can stay connected. And now let's get back to this session, that is marginal costing. Now when I solve ICAI module, firstly I presume that you know the basic things about marginal costing. Marginal costing is exclusively used for decision making. Friends, in business, whenever I want to take a decision, like should I sell this product, at what price I should sell this product, right? Should I continue or discontinue with this product? Many such important decisions are taken using marginal costing. In fact, the name of the chapter is decision making when you go to CA Final. This chapter is so very important in CA Inter because it builds a foundation for your CA Final. Okay. Quickly, I will take 5 minutes of time to go through the formulas that are there in this. Okay. So let's go to the formulas. I'll tell you exactly where it is. Please scroll down. So friends, we must start with this marginal cost statement. It is sales minus variable cost gives you contribution minus fixed cost gives you profit. This is a profitability statement made as per marginal costing. So with this, we get two formulas for contribution. Friends, contribution would be equal to variable cost plus sales and contribution would be equal to sales minus variable cost, or it would be profit plus fixed cost. तो फ्रेंड्स इधर से हमको दो फॉर्मूलाज मिल जाते हैं कंट्रीब्यूशन के, सेल्स माइनस वेरिएबल कॉस्ट एंड प्रॉफिट प्लस फिक्स कॉस्ट. And then we get this contribution in rupees. Suppose if I want to know my contribution percentage, what percentage contribution I've earned, that percentage contribution is nothing but, friends, PV ratio. It is nothing but contribution upon sales into 100. Okay. Or if there are two data given for two periods like week 1, week 2, month 1, month 2, in that case, you can use this formula as well. It will be change in profit minus, change in profit divided by change in sales into 100. Welcome, Shri Charan. So friends, two formulas for contribution, sales minus variable cost, and two formulas for contribution, profit plus fixed cost, right? Then two formulas for PV ratio, contribution upon sales into 100 and change in contribution divided by change in sales into 100. Okay. So these are the formulas for contribution and PV ratio. Now we go to break-even analysis. What is break-even point? Friends, it is that point where a manufacturer makes no profit, no loss. That is the meaning. But my friends, what is the need of this BP? Just like you, students, they need to know their passing marks. We need to get at least 40 to pass. Similarly, a manufacturer needs to know its BP, that we have to sell at least this much so that we can progress. We need to sell at least this much to survive. So just like a student who needs to know its passing marks in exam, a manufacturer needs to know BP for, its survival. Okay, this is a minimum sales the company must do in order to achieve the break even. Okay, how it is calculated. So again, there will be two formulas. If you want in units, it will be fixed cost upon contribution per unit. If you want in rupees, in value, friends, it will be fixed cost upon PV ratio. So it is fixed cost upon contribution per unit or fixed cost upon PV ratio. Got it, friends? So this is the formula for BP. So far, two formulas for contribution, two for PV ratio, and two for BP. The next formula that you should know is margin of safety. How to calculate margin of safety? It is sales exceeding the break-even sales is called margin of safety. First, I'm covering up all the formulas and then I'll go to the sums. Margin of safety. Where are you? So here it is margin of safety. Friends, it is BP. That is a minimum sales the manufacturer has to do. But that doesn't mean manufacturer will do that much sale only. Of course, his sales will go beyond the BP. And that sales beyond the BP are nothing but margin of safety sales, friends. Okay. So how do you find margin of safety? Very simple. Total sales minus break-even sales. That is margin of safety. Or you can do profit upon PV ratio or profit upon contribution per unit. So this is how margin of safety can be calculated. It will be profit upon contribution per unit to get in units or profit upon PV ratio to get in. Okay. So friend, these are the formulas for calculating margin of safety. So once again, let's repeat. Two formulas for contribution. Sales minus variable cost and profit plus fixed cost. Two formulas for PV ratio. Contribution upon sales into 100 or change in profit upon change in sales into 100. Then two formulas for BP. Fixed cost upon contribution per unit and fixed cost upon PV ratio. Two formulas for margin of safety. Profit upon PV ratio or profit upon contribution per unit. Okay. And friends, the last one that I would like to teach is through this marginal costing statement that I showed you at the beginning. It's here. Many a times, friends, examiner will give you profit. That the desired profit is this much. Calculate sales. So friends, you need to go reverse. Right? What you will do? You will take desired profit plus fixed cost. Desired profit plus fixed cost, you will get the contribution divided by contribution per unit to get the number of units to be sold, or you can divide it by PV ratio to get the sales value. Okay, so this is a formula for desired sales or required sales. It is desired profit plus fixed cost upon PV ratio or contribution. So friends, these are the set of formulas that you should know. Two formulas for contribution, two for PV ratio, two for BP, two for margin of safety, and friends, two for desires. The total, there are 10 formulas. And suppose, friends, if you don't remember the formulas or you think you're not confident, then just to make this marginal costing statement, let me tell you, all these formulas are derived from the profitability statement itself. Because we have, less of time in this, I'm not able to go in depth, right? So now let's quickly solve the sum because this session is all about solving ICAI module. Let us start with illustration number 1. Is So glad that so many students have joined in. And here it is. Illustration 1. MNP Limited sold 2,75,000 units of its product at 37.5 per unit. So ये है selling price. Variable cost is 17.5. Selling price 37.5, variable cost 17.5. Manufacturing cost is 14 and selling cost is 3.5, and this is how the total is 17.5. Fixed costs are incurred uniformly throughout the year, amounting to 35 lakhs, including depreciation of 15 lakhs. There are no beginning or ending inventories. Compute break-even level of sales quantity and cash break-even sales level quantity. So friends, they want BP in units. Now friends, how to solve the sum? Whenever there is this required part given, first understand what exactly it is. BP in quantity. For this, I know the formula. BP in quantity is nothing but fixed cost upon contribution per unit. Just think in your mind, this is a formula. Fixed cost upon contribution per unit. Now let us take one thing at a time. Numerator fixed cost. Do I have it? Yes, it is 35 lakhs. The denominator contribution per unit. Do I have it? No. It is to be calculated. So friends, we first will calculate contribution per unit and then apply this BP formula to get the answer. Okay. So friends, let me take up a sheet. We are into marginal costing. Illustration 1. I will not be writing properly here because I need to solve more number of sums. Okay. So what I want you to derive from this lecture is the approach of solving. How am I solving? How am I thinking? This is what you need to learn today, friends. So firstly, I need to get contribution per unit. That would be nothing but selling price minus variable cost. I already know my selling price, that is 37.5. And I know my variable cost, which is 17.5. So I get a contribution of 20 per unit. So now easily I can apply BP in quantity. That is fixed cost upon contribution per unit. Fixed cost is 35 lakhs. And contribution per unit is 20. What is the answer? It is 1,75,000 units. So this answer means that when this company MNP Limited will sell 1,75,000 units, it will be able to recover all its cost, and by selling 1,75,000 units, there will be no profit, no loss. When this company sales will exceed this 1,75,000, the company will start making profit. So this is the meaning of BEP. They have also asked us again BEP, but they are asking us cash BEP. Now friends, when they ask me cash BEP, what I'll take is the cash fixed cost and the cash contribution per unit. Basically, the non-cash items will be subtracted. My fixed cost is 35 lakhs. But out of this, there is 15 lakhs depreciation. And depreciation is a non-cash item, so it will be subtracted. And contribution is always your cash one. So friends, I get 20 lakhs divided by 20. 1 lakh units is the cash B. So friends, when the company MNP Limited will sell 1 lakh units, it will be able to cover all its cash cost. Okay? 1,75,000 its total BEP, it will be able to cover all its cost with the cash or non-cash. So friends, this is how ICAI can ask you BEP. Cash BEP and total BEP. I hope you have understood this sum and have a look at the solution. We have done it right. Okay. Now we come to multiple product BEP. Now friends, this is something very interesting. Okay. First, tell me the two formulas of BEP. In units it is fixed cost upon contribution per unit. And BP in rupees, it is fixed cost upon PV. Correct? We already know this formulas. But friends, like we did in illustration 1, we had just one product. In many sums that you solve, and when you use this formula, friends, the company is dealing in one product. The sums are made like this. But practically, if you see, no company deals in just one product. Right? Company is diversified. Company deals in 2 or more products. So when company is dealing in 2 or more products, how will you calculate the company's BP? So friends, when there are multiple products, BEP is calculated like this. In the numerator, we will take up total fixed cost. Okay, the total fixed cost of the company as a whole. We will take total fixed cost of the company divided by what? Contribution per unit, PV ratio. But friends, this contribution per unit will be of a product. Suppose if the company is selling A, B, C, I have to take contribution of what? A or B or C or together. What it should be. So friends, here what is to be done is contribution will be taken of all the 3 products on weighted average basis. So when you have multiple BP, your formula will be total fixed cost of the company divided by weighted average contribution per unit. And in case of PV ratio, you can take weighted average PV ratio or you call it combined PV. Okay. So when there is multiple products, please note this, my friends. When there is multiple product, okay, the formula will be total fixed cost of the company divided by weighted average contribution per unit. And when it is in rupees, it is total fixed cost of the company divided by combined PV ratio. Okay. Now, friends, let us try to apply this in illustration number 2. There it is, yeah. It's example 4 over here. Arnav Limited sells 2 products, J and K. The sales mix is 4 units of J and 3 units of K. Right? The company, if it is selling 4 units of J, it will sell 3 units of K. So basically the sales ratio is 4:3. Right? Company sells more of J and less of K. The contribution per unit is 40 and 20. The fixed cost is 6,16,000 per month. Okay. And what you have to do is calculate the combined BP for Arnav Limited. Exactly, Arnav Limited has to break even. How will Arnav Limited break even? By selling so much of J and so much of K. So what will be that break even quantity? This is what is to be computed. So friends, what will Arnav Limited do? We are doing example number 4. Arnav Limited will calculate BEP like this. BEP in units. It will be total fixed cost of the company divided by weighted average contribution per unit. Total fixed cost is 6,16,000. We know this. Now, how to calculate this weighted average contribution per unit? I'll do this working here. Here what we do is we take contribution per unit multiplied by the weights of product. Multiplied by the weights of product, and these weights are nothing but sales mix quantity. So we have 2 products J and K. Contribution is how much? It is given as 40 and 20. So 40 per unit, 20 per unit. And the sales ratio is 4:3. Correct? So it is 4/7 and 3/7. These are the weights of the product. The sales ratio will be the weights. Remember this. So now what do you get? 22.86 and 8.57. Total it. You get 31.43. So friends, weighted average of this J and K is 31.43. And now get the BEP in units. 6,16,000 divided by 31.43. You get 19,599 point something. It will be around 600 only. Okay. So what does this mean? Arnav Limited, the company has to sell overall 19,600. Arnav Limited company को total 19,600 बेचना होगा. दोनों J और K मिलाकर the company in totality has to sell 19,600 units. Okay. तब जाकर company का break even होगा. Okay. When the company sells this 19,600, it will break even. But the point is, company will sell 19,600, but how much of J, how much of K out of this? So friends, for the company, BEP is 19,600 units. Out of this, J and K will be how much? So it will be 19,600, 4 by 7, and 19,600. Okay? So what do you get? 11,200 and 8,400. So friends, this is how company's BEP and product-wise BEP is computed when a company is dealing in multiple products. I hope you have understood this very nicely. Single product, multiple product, how to calculate BEP. Please write in the comment section if you have understood. Please. And then we move further. Yes, please. Now we move on to illustration number 2. You are given the following particulars. Fixed cost is 1,50,000, variable cost is 15, and selling price is 30. Okay. Calculate BEP and sales to earn profit of 20,000. So friends, how to calculate BEP? It is fixed cost upon contribution per unit. Fixed cost is 1,50,000. Contribution per unit will be sales minus variable cost, that is 30 minus 15, you get 15. So 1,50,000 divided by this 15, you get 10,000 units. Correct, friends? And this will be your break-even point. Then is calculate sales to earn profit of 20,000. So friends, when you want profit of 20,000, what will be the sale? This is the question. So friends, we use the formula of required sales, which is desired profit plus fixed cost upon contribution per unit. Your desired profit is 20,000. Your fixed cost is 1,50,000. And your contribution per unit is 15. What do you get? 1,50,000 plus 20,000 divided by... Friends, it is 11,333 units. 0.3 recurring. So if the company sells these many units, it will be able to get profit. They have asked you sales. So in order to convert this sales units into rupees, just multiply this by selling price of 30. Get the value as 3,40,000. You're going to sell this many units multiplied by selling price of 30. Get the sales value as 3,40,000. So this is one of the easiest sum ever. Okay. Let's proceed further to illustration number 3. A company has a PV ratio of 40%. Compute by what percentage sales must be increased to offset 20% reduction in selling price. Now this is one of the very tricky question, and see, the question is just of 2 lines, but don't think that the answer will be of just 1 or 2 lines. Okay, you need to understand this and have patience in understanding. The given PV ratio is 40%. Okay, so if I were to understand this PV ratio 40%, what it would mean? Illustration number 4. अगर पीवी रेशियो 40% है, इसका मतलब ये होता है कि सेलिंग प्राइस आपका 100 है एंड कंट्रीब्यूशन आपका 40 है. मींस योर वेरिएबल कॉस्ट इज, okay, it means this: your PV ratio is 40%. Okay. Now what is going to change? क्या change होने वाला है? Sales must be increased to offset 20% reduction in selling price. हमारा जो selling price है वो 20% से कम होने वाला है. Okay. तो बॉस क्या change होगा? Selling price is 100, 60, 40. This is the present scenario. And change or revise will be this. Your selling price will reduce by 20%. So it will become 80. Got it? It will become 80. So with this change, what will happen? तो फ्रेंड्स इससे क्या होगा? अगर आपका सेलिंग प्राइस कम हो गया है, वेरिएबल कॉस्ट थोड़ी ना कम होगा, तो सीधा सीधा आपका कंट्रीब्यूशन कम हो रहा है. तो कंट्रीब्यूशन इज रिड्यूसिंग बाय 50%, है ना? 40 था 20 हो गया. ओके तो यार ये पंगा हो गया. दिस इज द चेंज. ओके सो व्हाट if this is the change? The question is asking you, focus on this. By what percentage sales must be increased to offset the change? So my dear friends, if I ask you, if this is the data for one unit, okay, you are selling the product at 80, your variable cost is 60, you are earning 20 rupees contribution. This data for one unit, and now you need 40 contribution as you used to earn earlier. Then what should be the change in sales? How many units you will sell? So it is simple to answer, friends. You need to sell 2 units. It means that now in order to earn the same profit, the same contribution, you will have to double your sales quantity. Right? You used to sell 1 unit and earn 40. Now you will sell 2 units to earn that 40. That means your sales quantity needs doubled. Got it? Quantity double means increase by 100%. Okay. So friends, if I double the quantity, my sales will now be 160. My variable cost will be 120. Now if they ask you what will be the change in value, what is the increase in value? So friends, earlier the sales were 100 to earn profit of 40. Now you need to get the sales of 160 to earn PV ratio 40. So this increase is 60 on 100. That is nothing but sales value will be increasing by. I hope you have understood this, friends. Please write in the comment section, have you understood this sum? First we were earning 40, now we are earning 20. So now to earn 20, quantity should be doubled and sales value should be increasing by 60%. Please let me know in the comment section if you have understood the sum. Okay, now let's proceed further to the next sum. They have written so much of description. Now let's go ahead. Illustration number 4. PQR has furnished the following details for the 2 years. 1920 and 2021. Sales is given 8 lakhs. PV ratio 50%. Margin of safety as percentage of total sales is 40%. Now when they say margin of safety is 40%, it clearly tells me that my BEP will be 60%. Right? If margin of sales is 40%, your BEP will be 60%. There has been substantial savings in the fixed cost in the year 2021 due to restructuring process. The company could maintain its sales quantity level of 1920 in 2021 by reducing the selling price. You are required to calculate the following: sales for 2021 in value, fixed cost for 2021, and break-even sales for 2020. Okay, so whatever data they have asked is for 2021. And let's read again. There are substantial savings in fixed cost. Okay, so fixed cost is going to be less in 2021 as compared to 1920. And the company could maintain its sales quantity level by reducing the selling price. That means the quantity will be same. Okay, so now we have to calculate the sales, you have to calculate fixed cost, and you have to calculate B. So first of all, you should know all these things for the given year 1920. So let us have a look at that. In 1920, PV ratio is 50%, correct? And if PV ratio is 50%, obviously balance 50% will be variable cost. Okay. So friends, 8 lakhs is the sales. In 1920, your variable cost will be 4 lakhs and your contribution would be 4 lakhs, correct? 8 lakhs sales minus variable cost 4 lakhs and your contribution would be 4 lakhs. Okay, so this is the PV ratio. This is the profitability statement, I would say, for this. Further, what they have given is margin of safety is 40%. Okay, and break even is 60%. So what I would do here is pay attention. I am telling you this for illustration number is 4. Okay. Illustration 4. For 1920, sales 8 lakhs, variable cost 4 lakhs and contribution 4 lakhs. PV ratio is 40%. So what will be BEP formula? Friends, it will be fixed cost upon PV ratio. Correct? And BEP, as I know, is 60% of 8 lakh. Margin of safety is 40%, so BEP will be 60%. Fixed cost, I don't know. PV ratio is 40%. Get 4 lakhs 80. What will be fixed cost, friends? Fixed cost for 1920 would be 1 lakh 92. Fixed cost for the year 1920 would be 1 lakh 92,000. Okay. This is, friends, what they've got it. Now, the data that I need here further. Minus fixed cost 1 lakh 92,000. I get profit as how much? 4 lakhs minus 1 lakhs 92,000. I get 2 lakh 8,000. So friends, this completes the data for the year 1920. Now friends, let us have a look at the year 2021. PV ratio is 37.5% and margin of safety is 21.875%. Okay. Calculate the sales, fixed cost and BEP. 3 things are asked. So how will you do it? In the year 2021, sales quantity has not changed. Who said this? It's already given the question. See here. The company could maintain its sales quantity, the same sales quantity. Thus, the variable cost is still 4 lakhs. Okay. So 4 lakhs, which was a variable cost. Here, same continues to be variable cost here because the quantity has not changed. Okay. Selling price will change, but quantity has not changed, remember. The cost of making has not changed, friends. Further, got to know this. Variable cost is 4 lakhs. Now, in 2021, PV ratio is 37.5. So, when they say 37.5 as PV ratio, friends, PV ratio is 37.5%. So, 100 minus 37.5, you get variable cost as 62.5, which is 4 lakhs. 4 lakhs divided by 62.5%. Friends, you get sales at 6 lakhs 40,000. For the students, those who have not understood this, I'll repeat this again, friends. Quantity change नहीं हुआ है. इसका मतलब वेरिएबल कॉस्ट जो बनाने का खर्चा है वो सेम रहेगा. ओके, अभी पीवी रेशियो है 37.5. तो फ्रेंड्स, हमारा जो वेरिएबल कॉस्ट होगा वो होगा 62.5 और ये होगा 100. करेक्ट? दिस इज 4 lakhs. So 4 lakhs divided by 60.5, you get this as your sales. And what will be contribution? Friends, it will be lakh 40,000. So this is what is there for the year 2020, what we have calculated is sales for the year, which is 6,40,000. Okay. Now they are asking you, what will be BEP? The third part. They have asked us BEP. So, as I said here, if 40% is margin of safety, 60% will be BEP. So, friends, if 21.875% is margin of safety, so what will be BEP? Your margin of safety is 21.875. So your BEP will be 100 minus 21.875. How much you get? It's 78.125%. Correct? So this will be your BEP. So friends, BEP, if you see, your sales is 6,40,000 into 78.125%. You get 5 lakhs as your BEP. So now we have got BEP also. Friends, we first worked out sales. Now based on this, we have worked out BEP. And the last point they are asking is fixed cost. So using BEP formula only, which is fixed cost upon PV ratio, I can get the fixed cost here. BEP is 5 lakhs. Fixed cost is to be computed. PV ratio is 37.5. Correct? That is 37.5%. Come on, friends, get the value of fixed cost. One lakh 87,500. So, friends, this is the fixed cost value. Okay? I hope you have understood the sum. So, how we did it? Using the data for 1920, first of all, I made its profitability statement. Now, they said that the quantity is not going to change. So, we took same variable cost. Then we found out sales. Then using sales, we found out BEP. Then using BEP, we found out the fixed cost. And this was the approach of the sum. I hope you have understood this, friends. Please let me know in the comment section, how did you find the sum? And now let's move forward to the next sum. It's about break-even chart. I'll go with illustrations with this one. Illustration number 5. Yeah. Illustration 5. You are given the following data for the current financial year of Rio Company Limited. And this is the data. 60% is variable cost, which is 60,000. 30% is fixed cost, that is 30,000. And profit is 10,000. Sales is 1 lakh. So if I were to make this in profitability statement format, it would be sales 1 lakh minus variable cost of 60,000 would give me contribution of 40,000 minus fixed cost of 30,000 would give me profit of 10. Correct, friends? This would be my profitability. Find out break-even point, PV ratio, margin of safety. Also draw break-even chart showing contribution and profit. So firstly, let us find out BEP. How do you find out BEP? It's so simple. Fixed cost upon PV ratio. PV ratio is 40%. So BEP will be fixed cost upon PV ratio, which is 30,000 divided by 40%. You get 75,000 as your BEP. Okay. Then is PV ratio. We already got it 40%. Margin of safety. So friends, we have worked out BEP is 75,000. So your margin of safety will be total sales minus break-even sales, which is 1 lakh minus BEP sales of 75,000. Friends, your margin of safety 25,000. It was so simple. But in this sum, what is important is break-even chart. Thank you. May I know your name, motivational staff? Watching your costing uploaded lectures since last 2 days was very helpful. Thank you so much. In fact, I would recommend you to download my app Costing by Devangi, where you will get more such stuff. Okay. And friends, you can message me your doubts. You can get your doubts solved. Only if you download our app, you will be able to stay connected. Please. Yeah. Coming back to this break-even chart, you need to find out contribution and profit. So let us see the solved part. See friends, this is what we worked out. Now let's see this break-even chart. How to make break-even chart? Friends, in your x-axis, you will take the units. And on y-axis, you will take rupees. Rupees may be cost rupees, sales rupees, both. Okay. Now what here we will do is, we will plot few points and with that, we'll draw a graph. Now, how to do this? Pay attention. They've said that 60,000 is the variable cost. Okay. So where is the 60,000 friends? Basically 10,000, 20,000, 30,000, 40, 100 is above. So this will be 0. I am so sorry. 10, 20, 90 and 100. Okay. Now, where will be this 60,000 variable cost? It will be here. Okay, 60,000 cost. Going back to question. Now, nowhere units are mentioned. So, we assume 1 unit, 1 rupee, like that only. So, we get here. So, sorry. Chart is here. So, we take 3,000 as here. Okay. Similarly, we have plotted the variable cost. Now we plot 30,000 as fixed cost. Fixed cost 30,000 here. Okay. Now friends, talking about variable cost graph. Now if I make 0 units, variable cost will be 0. If I make 1 unit, variable cost will be more. If I take 2 units, variable cost will go on increasing. So friends, this is how your variable cost graph will be, like this, right? This is your variable cost graph. Fixed cost is 30,000. Friends, fixed cost is incurred 30,000 irrespective of the units I make. So friends, this will be your fixed cost graph. It will be parallel to your x-axis. Okay? Got it? Now, total cost graph needs to be plotted. What is this total cost? Total cost is variable cost plus fixed cost. And it will be like this. 60,000 variable cost. Fixed cost 30, total gets to 90. We'll plot this one here. Total cost is 90. Now, your BP that you have already got, friends, is 75,000. We can plot this here. 75 will be between 70 and 80. And here it will be between 70 and 80. Got it? And friends, your total cost equation will start from here, 0. Sorry, not 0, 30. Because even if you make 0 units, your total cost will be 30, that is fixed cost. And it will pass like this. To the point where your total cost and sales graph meet? Which, friends? Your total cost line and your sales line where they meet, and that will be B. Okay, so my friends, you can try this. I'm not able to, teach in that same graph. What I would recommend is, understand this. Okay, I would make a fixed cost graph like this, which will be parallel to x-axis. A variable cost graph like this. Okay, it will keep on increasing, okay, as the number of units progress. These are units and this is rupees. This is how your variable cost and your fixed cost graph will look like. Once they are done, you will make total cost graph. Which graph? Total cost. And it will pass from here. Okay, this will be your total cost line. It will start not from 0 but from 30,000, that is your fixed cost. And then you would draw a sales line, and the place where your total cost and sales line meet, that will be. Got it? So this is how your BP is to be computed. Plot total cost and plot sales line, and the point where they meet, that will be B. Now, often students, ask me how to draw these graphs. We are not given such numbers. Okay. So in that case, what you can do is take multiple numbers. Like I'll tell you. The data that is given in the question is this. We have already written it here. It's this, right? Where sales is 1 lakh, variable cost is 6 lakhs, contribution is 4 lakhs, fixed cost is I have numbers. Your sales is 1 lakh, variable cost is 60,000, contribution is 40,000, fixed cost is 30,000, your profit is 10. Okay, one data is given. Now make a similar table for another sales value. Let's say you take sales value as 80,000. Okay, take a number which is lesser than 1 lakh. Okay, so for this, friends, 40% PV ratio, 32,000 will be the contribution. 48,000 will be variable cost, fixed cost will be still 30,000. Your profit will be 2. Now take a number which is more than 1 lakh. Let's take it as 1,20,000. So 1,20,000 into 40% PV ratio, you get 48,000. Variable cost will be 72,000. Fixed cost 30,000. Friends, you get 18,000. Okay. So now you have 3 sales figures. So with this 3 sales figures, you can draw a line of sale. You have 3 variable cost figures. You can draw a variable cost line. You have 3 fixed cost. So plot this 3 on your variable cost, on your graph. Fixed cost will be parallel to x-axis. Then find out total cost by adding this variable cost and fixed cost. Your total cost will be 1 lakh here. It will be 78,000 here. And it will be 1,02,000 here. Now using this 3 total costs, draw a line of total cost. Okay. Then draw a line of this 3 sales. And the point where this total cost and sales line meet, that will be. Okay. So information will be given only at one level. You assume numbers and get 2 other levels. And then only you will be able to plot it in your graph. Okay. And then, very simple, the point where your total cost and sales line meet, friends, that will be the BP. Okay. So this is how break-even chart is to be made. Hope you have understood this. And now let's not do more sums of graph. Let's proceed further with illustration number 7. A company earned a profit of 30,000 during the year. If marginal cost and selling price are 8 and 10, find out margin of safety. So how to find margin of safety, friends? It is nothing but profit upon contribution per unit. Profit is 30,000. Contribution is 2. You get how much? 15,000 units. Friends, 15,000 units will be margin of safety, but they have asked you amount. So 15,000 units will be sold at 10 per unit sales value. 15,000 into 10 will give you 1,50,000 as your margin of safety value. So you could use this contribution per unit, get the margin of safety units multiplied by 10 to get the value. Or you can do like this. Get the PV ratio as 20%. And then profit upon PV ratio will directly give you the value. Both are right. Okay. Next. Hello, Gaurav. How are you? You want to say something? You have written 30. What does this mean? Maybe you're answering something. Okay. I hope you are understanding the session. I hope you are getting knowledge from the session. Okay. Please write me your views, your comments on the session in the chat box. I would be glad to know it. And also comment on the video after you finish this live session, and also share this video with maximum friends so that even they can take the benefit. Okay, I understand that opening ICAI module is such a painful task. Friends, even when I was a student, I did not dare to open it, right? During my time, this costing was of just 50 marks. Let me tell you, the syllabus was same. There was just ABC costing was not there. Rest everything was there, friends. And all of this portion was just 50 marks, and it was such a painful thing to open ICAI module. And that is the reason why, friends, I like to solve ICAI module in live session, because I know that only if I take initiative, only if I do it, my students will do it. I recommend in my regular lectures also that open your books and do. But I know that students are not going to do it, right? So I take the initiative and I'm helping you. If you like this video, please comment it. Okay? Chalo. Let's proceed further with illustration number 8. A Limited maintains margin of safety of 37.5% with an overall contribution to sales ratio. Contribution to sales ratio is nothing but PV ratio of 40%. Okay. Fixed cost is 5 lakh. Calculate break even. Friends, BEP is nothing but fixed cost upon PV ratio. Fixed cost is 5 lakh, PV ratio 40%. So what do you get? 5 lakhs divided by 40%, you get 12 lakh 50,000 as your break. What will be total sales? Total sales is nothing but break even sales plus margin of safety. Both should be included. So my dear friends, let me tell you. Your total sales are always 100%. Okay? They have given that margin of safety is 37.5%. Now, if margin of safety is 37.5%, friends, what will be BEP? Please write in the comment section. What will be BEP? It will be 100 minus 37.5. It will be 62.5%. Correct? It will be 62.5%. And friends, this BEP, we already know it is 12 lakh 50. We just calculated it. So friends, what will be total? 62.5 is 12 lakh 50. What will be 100%? Come on. Such a simple sum will be 20. Got it? So simple. So we got BEP, we got the total sales as 20 lakhs. Now, total variable cost. Friends, if your PV ratio is 40%. That means your contribution is 40%. That means your variable cost is 60% of sales. You have got sales as 20 lakhs, right? So your variable cost will be 20 lakhs into 60%. Because your PV ratio is 40%, your variable cost will be 60. You get it as 12 lakhs. Got it? Profit. How to get this profit, friends? Profit, you can get it with margin of safety sales. Okay? Or you can make a profitability statement to get the profit. You can do the way you want it. So, friends, my sales are 20 lakhs, right? Into PV ratio of 40% gives me contribution of 8 lakhs. Minus fixed cost. My fixed cost is 5 lakhs. So I get a profit of 3. As simple as that. Right, friends? Find out new margin of safety. If sales volume is increased by 7.5%. Now, this is something new. Find out new margin of safety if sales volume is increased by 7.5%. What does this mean? Friends, we have already worked out all these. My existing sales value is 20 lakhs. If it increases by 7.5%, so 20 lakhs plus 7.5% gives me 21 lakh 50. Okay, so what will be new margin of safety? Friends, my BP is 12 lakh 50 and it is not going to change. Okay, so 21 lakh 50,000 minus 12 lakh 50, your BP, your new margin of safety comes to 9 lakh. The question is, new margin of safety, and friends, that will be 9 lakh rupees. Okay, your revised sales minus BP gives you new margin of safety. Got it? So this is about margin of safety. We proceed further. And friends, whatever formulas I told you at the beginning of the lecture are all here. You must have a look at this once. Illustration 9 is very simple. I want you to manage on your own. Or let's do it in a minute's time. It's very simple. Before I start, let me tell you, PV ratio is contribution upon sales into 100. Got it? And how to get this contribution? It is selling price minus variable cost, right? So basically, this is the formula for PV ratio. Now, friends, PV ratio will change if selling price changes. PV ratio will change if variable cost changes. PV ratio will change if the denominator selling price changes. Basically, change in any of these two, selling price, variable cost, will result to change in. Only if these two are constant, your PV ratio will remain same. And let us have a look at illustration number 9 with respect to this knowledge that we have. Let's read. By noting PV ratio will increase or PV ratio will decrease or PV ratio will not change, in the case may be, state how the following independent ratios will affect the PV. Increase in physical sales volume. Friends, if I sell 2 units, selling price will double, variable cost will double, so basically your PV ratio will not change. Okay, only if your selling price changes, only if your variable cost changes, it will change. So in case of 1, there will be no change in the PV. Increase in fixed cost. Remember, fixed cost has got nothing to do with PV ratio, so it will not change. Decrease in variable cost per unit. Yes, friends, if variable cost decreases, my contribution will increase and my PV ratio will also increase. Decrease in contribution margin. Friends, if contribution decreases, my PV ratio will also decrease. If selling price increases. Friends, if selling price increases, variable cost remaining same, my contribution will increase and my PV ratio will also increase. Decrease in fixed cost. Fixed cost has got nothing to do with PV ratio. 10% increase in both selling price and variable cost. Friends, when both increase in same proportion, PV ratio will remain unaffected. 10% decrease in selling price and 10% decrease in physical sales volume. So here there is no change in variable cost, remember. So when there is increase in selling price, your PV ratio will increase. 50% increase in variable cost and 50% decrease in fixed cost. Friends, fixed cost has got nothing to do with PV ratio. So 50% increase in variable cost will reduce my contribution and my PV ratio will also reduce. Increase in angle of incidence. What is this angle of incidence first of all? I just told you about the graph, right? So friends, this is BEP, where your sales and total cost meet. And friends, this angle, the angle formed by sales and total cost line, this angle is called angle of incidence. The smaller the angle of incidence, the lesser the profit. The bigger the angle of incidence, higher the profit. Okay? So, what they are asking, increase in angle of incidence. So, friends, if there is increase in angle of incidence, your profits will be higher, that is PV ratio will increase. Fixed cost will not change. PV ratio that will increase. Okay, I hope you have understood this. You can read this. And they've asked angle of incidence earlier. Before actually teaching you what is angle of incidence, please read this on your own. You will understand. Okay. Now we move on. You want me to take more number of sums now or you want me to do part 2? Please let me know in the comment section. Yes, I'm waiting for your answers, friends. Because the thing that is coming up now is a very different thing. You want me to take now or part 2? This is what I'm asking you. Akshara, Sricharan, Vivek. Motivational stuff, by the way, what is your name? If you are there in the session. So what I would do is, we had done the basic sums that were relating to the formulas, right? And now the sums that we have are all of decision making. Okay, so one more powerful, impactful video of this marginal costing is coming your way. Please subscribe to my YouTube channel. Okay, let me tell you, there's so many less number of subscribers and it is just because of you all. Reason, 92% of my viewers are not subscribed to my channel. Right? I'm so disappointed with these numbers. And let me tell you, this does not motivate me at all. So, please subscribe to my YouTube channel. Okay. So, friends, see you in session 2. Soon it will be announced. And also, friends, download my app to stay connected. Okay? Goodbye, good night, and all the best for your coming exams. Thank you.